Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, January 3rd, 5:31 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market in an uptrend since the follow-through days on 11, 1, and 2. However, checking over here at the trend gauge, market leadership really taken a hit. Anything that led in November and December that had a tech that was in any way tech related has really taken a harsh hit, giving back months of gains in some cases. We're going to take a look at 22 of those broken charts. Broken versus the 21-day exponential moving average on the daily chart, but how do they look on the weekly chart? And that's one of the themes of tonight's video, and why it's important to watch both the 50-day moving average and the 10-week moving average. And the reason for that is because when you're in a rally, you tend to close at the high of the week, and the weekly charts, you only the 10 the 50-day moving average is considered the equivalent of the 10-week moving average, but you only get 10 closes, and you typically close at the high of the range on those weekly charts. So you're only dividing by 10, and that's why after a rally, and this works just the opposite in a bear market, you will touch the weekly moving average before you get to the 50-day moving average. And I'm going to overlay daily and weekly charts. You'll see what I'm talking about. It'll become very clear. I'm not sure if I did a good job of explaining it, but anyway, so that wasn't the only downgrade, was market leadership going from the green arrow to neutral. 3 of the major indexes had a close below the 21-day moving average today, that being the NASDAQ 100, small caps, and mid caps. So second close below, we'll go to neutral on the arrow, but we've got the yellow sub arrow out there as fair warning. Medium term, the 50-day moving average and the 200-day moving average, all 5 of the major indexes are still above those levels. So what happened today? You can see by all of the red ink that you've got here that it was very clearly not a good day. It was the second day of rotation into dividend and defensive low volatility names coming out of growth. And as I mentioned, 3 indexes breaking below the 21-day moving average. Here are the numbers. The Big 7, kind of a safe harbor today. The finished mixed and only down an average of 1%. Would have been much better, except for Tesla was down 4%. RG8, you don't like seeing this. Our 8 growth ETF composite really taking a hit. And this is telling us all we need to know about mid cap, small, large cap, leadership growth stocks down 2.54%. S&P 500 gap down 0.5%. Really couldn't make any progress. Traded in a fairly tight range, but finished near the lows of the day, down 0.82%. RSP even worse, down 1.5%. NASDAQ 100 down 1.06. Equal weight even worse, down 1.34. That says that the selling was indiscriminate, as when both of the equal weight indexes take a beating worse than the big cap indexes. Dow down the least, down 0.76%. Mid caps and small caps hit hard. Mid caps down 2.3%. Russell 2000 small caps down 2.7%. Bonds the prices started lower, but added strength during the day. So yields ended up coming off. Didn't help the stock indexes though. But did buffer the 60-40 portfolio down 0.41%. In-house GROTECTION did some more trimming, but one big buy that we did that we'll talk about, something acting really well. In-house GROTECTION down 0.95%. Let's get to the chart. We'll start with the S&P 500. You can see the third down day, second close below the 8 EMA, still holding above the 21-day moving average and still holding that shakeout low from the 20th. Let's go to the NASDAQ 100. This is where with its first close below the 21, it's kind of rolled over now, break below that 400 level. You need to regain this basically immediately, as in tomorrow. Don't want to see 2 closes below the 21. The Dow holding up the best. Not even looking like there's any issue going on with the market. If you look at the Dow, down 0.76%. MDY mid caps breaking 21-day moving average, down to 2.3%. IWM down 2.7%, breaking below the 21. Now I'm going to go through all these five again, but I also at that time want to focus on, where is my chart here, the weekly uh, moving average. So while things look, for the most part, for those four, you can see the clear change in character. If you look at a weekly chart, it looks like it's really not that big a deal. Here's the big rally in IWM. Okay, we're down 2 weeks. This is a morning star pattern. Let's look for support. We're still 4.1% above the 10-week moving average. Look how far down the 50-day moving average is, 6.7%. So again, that 10-week is going to catch up much more quickly. How about the S&P 500? You can see we're above the 21 there. This is just a mild pullback on a weekly chart, still 2.3% above the 10-week, 4.1% above the 50-day. NASDAQ 100, big rally. Looks like no big deal on the weekly chart, despite the fact that we broke the 21. Dow, certainly not an issue. Let's just do mid caps for the heck of it. Broke the 21 there. Wide candle, but again, just looks like an evening star breakdown, and looking for support, as this was a big rally. And from big rallies sometimes come frequent, quick sell-offs, and that's what we're seeing right now. So those are the major indexes. Let's go to the VIX. VIX ticked up, as you might have imagined, second close above the 21. Let's go to the dollar. Dollar strong again today, fourth straight day, ran into the 21 and kind of paused there. So let's see if that does pause and we pull back more, and that might help out stocks a little bit. Obviously, no guarantee. Gold and gold down again, but undercut and reclaim the 21. Did GLD, GDX, sitting on the 50-day moving average. Bitcoin, the Bitcoin ETF was delayed again, and Bitcoin and Bitcoin stocks got hit, although it did rally off the lows, but Bitcoin down 5% on the day. Now to bonds, which did an about face today. BND bouncing at the 21, closing at the top of the range and slightly positive. TLT, the long bond bounced at the 21, closed positive. That means that you'll see the rates pulling back as they ran into the declining 21, just the opposite. Outside negative reversal on the yields, and the 10-year down 1%, outside negative reversal there also. Did I cover everything? Yes, I did. Let's go to the tail of the tape. Some changes here, and the changes aren't good. The stochastics on all five of the major indexes have rolled over now from overbought. Same thing with all 8 of the RG8. The NASI RSI is down from overbought today. The dollar has hooked up from oversold, and rates have hooked up from oversold. So from a stochastic standpoint, none of this is good for the overall market. The Santa Claus rally was a Santa Claus failure, ended up down 0.88%. Second harsh day down, really the third day down if you count last Friday. Second close below the 8 EMA, still 42 days above the 21 on the S&P 500. Sectors, the dollar, oils, and utilities, strong on the downside. Banks, retail, semiconductor, software, including cloud stocks. ITB, that's builders, and then XLYR and RE, IY and RE, that's industrials, consumer, discretionary, and real estate. Sold out some more positions, 4 of them. Tesla got stopped, also CoinPath and GTLB. We bought Lilly, one of the best looking charts out there, and very clear money flows into the defensive medical sector. We trimmed AMD and Snow. We'll look at those. Reduced our beta from 1.38 to 1.11, that TECS hedge doing its job. The bottom line, day 2 of defensive outperformance. 3 major indexes breaking the 21. So let's look at the charts of the trades, and then we're going to look at those 22 broken charts and how they look relative to their 50-day moving average, and then we will wrap it up. So let's start with LLY. Very clear accumulation in this today. It's had the stacked moving averages Nice day yesterday, followed through, gapped up above 600 today, closed at the top of its range, up 4.3% on 61% average volume. This is a big stock, 587 billion market cap, just even now coming into the top of this very nice 13% base. Relative strength laggard big time while tech was leading. Tech is now lagging. The script has been flipped, and you can see the relative strength in Lilly taken off now. Also NBO. We went with Lilly, but NBO, the chart looks pretty much just as good. So the sells today, Tesla, just a terrible day. Failed break above last Thursday, 4 days down. Stopped out on that. Also, coin, this was on the ETF news, got hammered, rebounded some in the day, but still below the 21-day moving average path. And you're going to see this taking a follow through to the downside. No support whatsoever at the 21 or yesterday's lows. I mentioned how that was going to be important yesterday. We did not get it today. Same thing with GTLB. Tried to rally, ran into the now declining 21, and that 60 level is acting as resistance now, whereas before it was support. So not good there. And we trimmed AMD, closed below the 21, did a decent bounce later in the day, and also snow. Same thing with the break below the 21 and a lower low. So let's go to these 22 stocks that I want to review here, and these are sorted by how much they're down this week, and that's right here on the chart if you want to take a peek at that. It's also going to be up here in the upper right hand corner. So what we're focusing on is how these are broken relative to the 21 with it rolling over, but in a lot of cases it's still above the 10-week moving average. Could put up a fight there. Very often one of the O'Neill rules, first pullback on a leading stock to the 10-week or 50-day moving average, it should bounce there and is a viable opportunity. So something that's broke on the 21 and still shows distance on the 50-day on the daily, maybe right at the 10-week moving average on the weekly. We're going to go through these quickly. Upstart, Carnival, a leader, same thing, still above the 50, down 12% on the week. I mean, these are pretty tough. Square broke the 21, still above the 50. Symbotic broke the 21, sitting on the 50 and the 10 week. I said 50, I meant 10 week. Twilio, harsh break of the 21, but still above the 10 week. IoT, harsh break of the 21, sitting on the 10 week. Path, harsh break of the 21. Stop me if you've heard this before. Duolingo broke the 10 week, sitting on the 50-day. MongoDB broke the 10 week and the 50-day. And DraftKings, these broke down before the first 2 days of this week. Here's DraftKings failing at the 21 in 2023, following through to the downside below the 10-week and 50-day moving average. Roblox, about a lot of consistent patterns here in these leaders, in a lot of case giving back multiple weeks of gains in 2 days. Net sitting on the 50-day move, the 10-week. Shop sitting on the 10-week. Datadog sitting on the 10-week. So it's very important to get some perspective. Here's BRBR, big break of the below the 21 on 83% average volume, broken chart on the daily right to the 10-week. It's important to be able to look at both time frames. GitLab not even close to the 10-week. Dash below the 10-week. VRT bounced late in the day and bounced at the 10-week. So what we want to look for signs of strength is the 10-week going to hold on these names? These were leading stocks in November and December. They're pulling back now. Is the 10-week moving average and or the 50-day moving average going to provide support for these? CCJ is another one that broke down late last year. It's below the 10-week and the 50-day. GoDaddy finally giving it up next to the 21, but still well above the 10-week. Airbnb broke the 21 last week, bounced at the 10-week, and that's the list of stocks. So that's one of the things that we're going to be monitoring in a separate list as broken, but we'll see if the 10-week can act as support, and if the market starts to right itself. Strong bull markets like that just don't normally die a quick death like that. So this is the first harsh pullback that we're getting. The strength is normally revealed in the pullback. You see some stocks holding up, but way too many of them for my liking, breaking the 21. But they did bounce in most cases at the 10-week for now. Will it continue? That's what we'll be monitoring. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com, or if you're interested in becoming a client, we've been hearing from quite a few people early this year about coming on board, and we welcome everybody. The email for that is dan@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. Remember, it's not how much you make in the markets, it's how much of that you can keep. Stick with us here at Revere as we monitor this first big rotation happening the first 2 days in 2024, and we'll see what the rest of this week and the rest of this month brings. Thanks for listening, and have a great day.